What's going on, guys? Craig Kyriakis here. Welcome back to my channel. Today I'm joined with Brandon Samples from, well, wait, I'll let you say it because you've got big news.
Yeah, man, we started a new company, Aspire Mortgage. We're super excited about it, and we're hitting the ground running.
Very nice, very nice. And we've got some big news to share with everyone today. There's been a lot of movement in the last 24 to 48 hours with mortgage rates. And so what we've seen is a huge push on the buyer's side to start locking their interest rate so that they can begin shopping. So Brandon, let's just dive right into this. I know we don't have a whole lot of time. What's going on with rates right now?
Yeah, man. The Fed came out yesterday and gave some different news for once. We're not doing the giant rate hikes anymore. They decided that they wanted to see the lagging indication of what they've been doing with interest rates. And so it was a smaller raise than, what we've been expecting. And so rates actually dropped by about 3/8 yesterday, from, an average of about 6.6 down to 6.25. So, that means your more qualified, higher credit score borrowers might even see 5% for the first time in a few months.
Well, and that's not a small deal, right? Because one of the things that we've been hearing most from our clients on the buy side is that it doesn't make sense to make a purchase right now because their payment would be so much higher than it would have earlier this year because of those interest rates ticking up. So now that we've seen such a substantial drop, I think it makes sense for anyone who has been thinking about shopping to go ahead and lock now and kind of get moving in their journey.
Yeah, absolutely. I think, just from, the last 2 or 3 weeks, it's been one of the largest rate drops since 2008. We were at, 7.25%, as soon as 3 or 4 weeks ago. And so we've dropped almost, 0.75% on interest rates. And so it does look like we're heading towards more of a stable market. I'll cross my fingers, I'm not going to put a hill to die on there, but I am thinking that we're seeing some more sustainability in the market. And I do think, hopefully within the next few months, we'll see consistently, around that low 6, maybe high 5 interest rate, making it more affordable for people to go out and, buy houses.
Definitely. And I think that's really going to help if we can get into, like you're saying, low 6s, high 5s. I think that's a much more affordable area as far as interest rates are concerned. And it's also less of a scary number. I think if people are looking at, or if they're facing down a 5% rate or 5.5% rate, it just doesn't seem as bad, or it doesn't feel as bad as if you're looking down the barrel of a 7.5% interest rate on a $300,000 house. Right. So, and I really like the point that you made is that we're starting to see some relief in the market. And I think that's an important point to drive home, because what I've been noticing from the real estate sales side of things is that we really are, or we seem to be in this awkward kind of growing pain, or maybe it's like a shrinking pain, but I feel like I'm hearing a lot of chatter from my fellow agents about, the market, just being dead because interest rates are so high. I know that there are also a lot of agents that are still very busy. Mm-hmm. And I think, some of it is mindset on the side of agents and things like that. But I also feel like there's some agents that are maybe they have access to, or they've got preferred partners like you, like our relationship, where we understand that in order to help our clients succeed, we've got to be able to think outside the box. And so what we've been doing is talking a lot about rate buy downs, whether that be a permanent rate buy down or utilizing like a 3-2-1 or 2-1 buy down. And I think we've had a lot of success on that front, especially in showing buyers the savings in terms of monthly payment that they could get if we're able to get a buy down worked out for them. Now, do you want to give everyone who's listening just a little bit of a rundown on what the different buy downs are and how they work real quick?
Yeah, absolutely. Yeah. So really you got two options when you're looking at buy downs. Like you said, the permanent buy down, which is basically just paying an upfront premium where you're going to look at buying down the interest rate for the life of the loan. And really what we do to kind of determine if that makes sense is we're going to do a cost analysis, just seeing how long it's going to take you to stay in that property to make up the difference on the interest. And so really, when you're buying down points permanently, you want to make sure that it makes sense for the duration you're going to hold that loan, or if you think refi could be a potential thing on the horizon, in the next coming years, it might not make as much sense. But you can definitely do that. I know a lot of people are doing that right now. But
talking
also
about the permanent rate buy down.
Yeah, on the permanent rate buy down. But I do think it's more, in my opinion, it's more prudent to do the 2-1 buy down right now, which really is an advantageous thing for buyers, because they aren't going to be paying for that. It'd be something that would be contributed on the seller side of things. Right now, I think you could agree that sellers are feeling this just as much as buyers are, that if you are wanting to get out of your house, it's kind of getting a little bit tight and few and far between people that are actually interested in buying. And so a 2-1 buy down really is just, it's not that complicated. It's just setting up a separate escrow account or a separate account where the seller is going to contribute a lump sum of money that's basically just going to pay the difference of what your interest rate is going to be locked at and what it would be currently paying at. So if you locked in today at, the average rate's around 6.3, your 2-1 buy down would actually start at 4.3% for the first year, going to 5.3 the second, and being a 30-year fixed at the 6.3. And so really all we're doing on a 2-1 buy down is paying the difference of interest between that 4.3 and 6.3%. And so
over the life of the loan.
Yeah. And so, that first year, the payment, you might be saving $120 a month in interest. And really the 2-1 buy down is just the seller's going to pay that $120 a month or whatever, the difference in that interest payment a month is until the 2 years is over. And so I do see a lot of people utilizing that. And now with these rate drops, if you can get down into a 30-year fixed, high 5 interest rate, you could be starting the first year of your mortgage in a high 3% if you can utilize that 2-1 buy down.
Well, and here's the thing also, you mentioned sellers earlier, and the big thing, or rather what's great about this is that it's actually good for sellers too. I see a lot of, this isn't the seller's fault, but I see a lot of agents recently, I just saw one this morning, where they're starting to do some things that are like illegal with regard to MLS rules and OCMAR, which is the overseeing state agency that oversees the real estate industry here. And what they're doing is, instead of giving a property a price reduction, which can have a little bit of a negative connotation, people who might be looking at it online see, okay, it's been on the market for 22 days. They just dropped it 25,000. What's wrong with it? They kind of have that thought process. Well, what we're seeing some agents do is they're just releasing it. They're releasing the listing and then immediately re-uploading it with a new MLS number at a reduced price. And so then you've got new days on market. You're at a lower price. You've effectively lowered the price of the listing, but you've done it illegally. And it can cause a lot of issues, not just for you, but also for your seller. So instead of taking a risk or a little bit of a gamble and doing something like that, there's more intelligent things that we can do. Like, as an agent, you're able to market the seller's willingness to offer a rate buy down solution for a potential buyer rather than a price discount. And the reason that I find that so important to convey to our sellers is because if you're talking about potentially marking down your property, let's throw a number out. Let's say it's listed a little high, $400,000 house. Maybe you're talking about dropping it $10,000, $15,000 or so. Well, instead of just taking that hickey to the chin, like maybe we can like offer up 9,000 or 8,500, whatever it is, a smaller amount to the buyer in the form of a seller credit so that they're able to use those funds to effectively buy down their rate, effectively lowering their payment a couple $100 a month, making things much more affordable for them. And thus getting the home sold more quickly. I think it's really just been a no-brainer. It's been a great solution that buyers have been happy with, sellers have been happy with, and it seems to be the thing that's connecting the dots in this weird time.
Yeah, absolutely. Yeah, I think, crazy times call for crazy measures, right? So a lot of people are doing a lot of different things, but I do think that there are creative solutions out there and there's ways to stay busy. And I think that, just staying informed on the topics ourselves and making sure that we can relay those to our clients. I think that's really all we can do. But I am optimistic about going into this next year. Fannie and Freddie have projected that these rates will be fairly consistent, if not even decreasing a little bit more, just with the new CPI that's come out and just the trajectory that we're seeing. We could see interest rates drop even a little bit more than what we saw yesterday.
Real quick, Brandon, I don't mean to derail your thought process, but for anyone that doesn't understand CPI, Consumer Price Index, what exactly is that and why is it important?
Yeah, I mean, it is directing or correlating directly to inflation. And so that's been the big issue that we've been combating. Obviously, you've probably heard that in the news a million times over the last few months, that inflation is not great. And so really, it's just the Federal Reserve's way of, trying to battle inflation by raising interest rates. And so since we've seen that price index showing that consumer goods are not continuing to go the wrong way of inflation, we're kind of seeing the market ease back and show these interest rates to slowly stop going up as fast as they were.
Well, and that's a really important point because what was it last week? Or no, actually it was a couple weeks ago when we got the report from October in, and it showed that inflation the inflation numbers came in a lot lower than what was anticipated. And so that resulted in a little bit of a rate decrease. And now we're seeing the same thing, or what we believe is going to be the same thing for the month of November, now here in December. And so another big question that you might be able to answer for us is, are we, or should we expect to see any additional rate decreases before the end of the year? There are a lot of buyers out there and sellers also who are hoping to get their homes sold before the holidays, or buyers hoping to close on a home before Christmas. Is there any advantage to holding off a little while longer to see if these rates come down anymore? Or, what's the thought process there?
Yeah, I mean, I definitely think there could be. I don't think that there's going to be anything, that's going to make or break the bank as far as rate adjustments going forward. I do think that we're going to, I think, the Fed has made it pretty clear we're going to see what is going to happen, based on the rates hikes that we've already had, because typically it's a lagging indicator, meaning that we're not going to see the impacts on the economy immediately upon what they're doing. And so I think Jerome came out yesterday, the chairman of the Federal Reserve, saying, we're gonna kind of slow down and see what's going to happen over the next few months. And so there might be some little decreases or adjustments either way. But I definitely want to make a decision based on, banking that the rates are going to continue to go down sharply, because I wouldn't bet on it.
Yeah. And worst case scenario, rates have come down so much in the last 2-3 weeks, especially after the news from yesterday. I think it just makes sense if you know that you're in the market to buy in the next 45, 60 or so days, lock your rate now and get to shopping, because there's more inventory available right now than there has been in basically 2 years. So there's more options for you as a buyer, and it's less competitive because there's fewer buyers in the marketplace combined with more inventory available for you. And that acts as a double whammy for you if you're on the buyer side, because sellers are now the ones faced with more competition, right? Because now there's more homes for sale. So they've got to get more and more competitive with each other, so to speak. We're not like throwing blows, but it certainly makes a difference now if you have 2 or 3 or 4, 10 homes listed in the same neighborhood, which ones are priced the best, which ones are the most updated, clean, tidy, who's offering the best incentives for buyers, and who understands the market well enough to kind of attract the right buyers and actually, convert those people into, into a sale, because that's what you're trying to do when you're selling a home, right? So, man, I don't think there's any point in waiting. I really don't. I think rates have come down so much over the course of the last couple of weeks. And just to reiterate, with what happened yesterday, it makes no sense if you are a buyer to hold out waiting for rates. We've kind of been preaching this for the last 6 or 8 months, and you hear Dave Ramsey say it and every other economist. But if like the price of the house is the price of the house. I did a market update report last night. That video is coming out today. And we talk about sales prices not decreasing. In fact, sales prices over the month of November increased. I looked at the Oklahoma City market, Edmond, and Guthrie, and all 3 of those markets increased in the double digits month over month from October to November. And so that's telling me that prices are not going to crash like some buyers are thinking they're going to. That's something I hear a lot. I don't know how much you hear that, but I hear people say, I'm going to hold off until the market crashes and then I'm going to buy it up for a steal or whatever it is. I don't think that's happening. And a big part of that is the influx from people from other metros, from other states that are coming in. And I was looking at those numbers, and it's actually pretty impressive. Redfin lists Oklahoma City as a very competitive market, even today, or as of November. And homes that are priced correctly are still selling 26.8% faster than those that are not priced correctly. And so, I guess what I'm trying to get back to is, if you know that you're in the market, or if your family's in the market to buy a home, conditions are actually ripe for you to get a great deal. You're going to get good concessions from the seller. You're probably going to get the house at a good price. Your financing is going to be really great, except for the rate's going to be a little higher than you probably want it to be, considering what they were 2 years ago. But the fact of the matter is, we're not in the same market that it was 2 years ago.
Yeah, and I would even say, the old phrase, you marry the house but you date the rate, right? It is true, and I think if people are holding out for interest rates to go back down, I think you're just going to be waiting until the market picks up, and then you're in a more competitive state again, because when mortgaging becomes cheaper, that brings more people to the table. And so I would much rather buy a house that's accurately priced. I'd rather buy a $200,000 house that's worth $200,000 and get an interest rate that's a little bit higher, rather than waiting to interest rates go down, buy a house that's worth $200,000 for $250,000, because we have all these people that are willing to spend a little bit more. And because then when the market cheap. Yeah, the money's cheap, but if the market corrects, you're not in a great place financially with your investment. I mean, that is what buying homes eventually is going to come out to, because unless you're living in it 30 years, it's going to be an investment. It still would be, but if you're going to sell it in 3 or 4 years, that's something that you really need to take into consideration is, even though the interest rate might be a little bit higher, if it's priced right, it's going to be a wise investment down the road.
Couldn't agree more, man. All right. Well, I think we're just about out of time, so let's go ahead and wrap this up. I think, Brandon, that's great advice for a buyer. And I think whether you're a buyer or a seller, the message you should be taking away from this conversation is that the market is not falling apart like you might hear on CNN or pick your news channel. But the market's not falling apart. There are some markets in the coastal cities that are being affected a little bit more than us, but I think we're quite insulated here for a multitude of reasons. And so I think we'll continue to see housing prices here, at least in the Oklahoma City market, stay relatively high. And I think despite what news you might be hearing, I think it's still a great time to buy.
Yeah, couldn't agree more.
Cool. All right, man. Well, hey, until the next time, I guess take it easy and we'll catch up with you later. Thanks so much.
Thanks, guys.
All right. See ya.